Good morning again, and welcome to the fixed asset overview session for for this distance learning financial integration training. And the presentation that we will see now should take us about 1 hour, and it's supposed to be an overview for financial accounting and treasury local process experts on fixed assets. So this will give you, hopefully, the background info. Sorry, 1 second. The background info that you need to know to understand all the interactions that the system is doing in the background in terms of financial posting. So if you need to review your accounts, you have an idea, or if you are involved in any troubleshooting exercise, you know more or less what is going on. All right. So as usual, if you have any question, please use the Q&A panel, or you can use the chat for a more informal or formal comment. Okay, so please, I see a lot of people that are connected, but still not really looking at my screen. So please look at the screen because we are starting. Okay, so we are taking off. The first thing that I want to show to you is like the end-to-end process for asset accounting. So what is the life cycle of a fixed asset? All right. Sorry for the animation because there was something missing there. Okay, so what you have in front of you, it's in a nutshell, or it's mainly the end-to-end process for fixed assets. So any fixed asset, any asset in a fixed asset in the system that is meeting certain criteria or IPSAS capitalization criteria we will see later, will have an asset master record in the system. So the first step that it happens in the system for management of assets is the creation of this, what is called the asset master shell. This is the asset master record that will have information about the asset from accounting perspective, and then there you will also have information on its net book value, depreciation, etc. So initially the system is creating an asset master, for instance, when the PO is processed, and this is created automatically. Now there is a second step in the system that is called, and this is a very important one, it is called acquisition of assets. This is the moment where we are actually acquiring the asset, having control of the asset, and it's when we are capitalizing the value of the asset. In this second process, we'll have acquisition of assets through purchase, through donation, when it's grant related, other type of acquisition through donating the right to use, which is basically final lease as a main example. New constructions or improvement, which will be assets under construction, and we have also other manual acquisitions, right? So this would be like the start point of the fixed asset master record impact in the books. So the first time the books have an impact will be when we go through the acquisition process. This is when we, let's say, acquire the asset, or when we get control of the asset, and then during the asset useful life, the asset may have different events or process. For sure, it will be depreciated only. This is another process, and then it may be required to review its useful life, or you may have an impairment or even a transfer. Now today we are going to focus on the overview on how this is integrated into financial accounting, how it integrates with financial accounting and other modules, and then we'll see some important details on acquisition of assets and some important details on transfer of assets. Why on acquisition? Because finance sections are involved typically on the troubleshooting, so you need to understand what is the logic that the business logic that the system is applying. And on transfers of assets, because it's also something that requires finance involvement. Okay, sorry for drawing this ugly arrow here. But it's just to reinforce that these two processes are very relevant for US finance LPs, and we will cover them with a bit more detail. Of course, at the end of the process, at the end of the life of this asset, not only at the end of the useful life, but at a certain moment later, there will be the retirement of the asset, which is aligned with the write-off process of the equipment itself. So this is another process that will also impact the accounts, and we'll see it briefly today. All right. So if you have any question about, okay, we'll have a quick review on the donation to enable the depreciation process. Okay. So there is a question about how can we estimate the donation to enable the depreciation process. I mean, I'm not sure I understand the question, but basically, once we will review the different IPSAS capitalization criteria, we will see that if we have control of an asset for more than 1 year, right, and then the rest of the value of the asset is about the capitalization threshold, etc., we should have the assets recorded, right? So there should be an acquisition process, maybe a manual acquisition related to donation, but let's see down the road if with the following information you understand it better. So Umoja solution supporting UN IPSAS. So as you know, okay, this is general information about IPSAS, but within the context of fixed asset. As you know, IPSAS requires full accrual for the accounting system, and as you know, expenses used to be recognized when services or goods are received. Now, you know that this one is not true anymore for goods, right? So this will be for services, but for goods, it's not like this anymore, because if the goods go into inventory, then we will not recognize the expenses at that moment. So 1 second, I want to just make a note there. So 1 second. Okay, so remember this one, I will remove it from the slide because this is maybe another slide. And then for goods, it will depend if they are acquired for consumption or they are acquired for inventory, as you know. But fixed assets are capitalized and depreciated based on their useful life, which means that if you are acquiring a fixed asset, of course, there will be no expense when the asset is received. On the other hand, we will have basically the capitalization of the asset. The capitalization date of the asset will be basically when we take control of the asset. Okay, Umoja is designed to support the proper adoption of IPSAS, blah, 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 blah. This one as well, we already know. Well, this may be more interesting for you because regarding financial accounting and capitalization criteria, you have the reference. If you as an LP, you have never visited this link, this is very important for you because this in un.org/IPSAS, you have all the documentation regarding IPSAS compliance. Particularly for this presentation and anything related to equipment, we have the property, plant, and equipment corporate guidance. So I will recommend you to go and check this one for your further information. And in general, please visit this website because you have let's say the implementation of IPSAS within UN. You have all the documentation there, and most of the business questions that I get, you will be able to reply them by checking this corporate guidance. Okay, 1 second because I have another question. So someone is asking about the end-to-end, even though we will cover it later. If I have any example of manual acquisition. Yeah, for example, we had some processes after the migration of Galileo, we realized that there were or after physical verifications, we realized that we have some assets, some equipment that are supposed to be assets that are not being recognized or they are not tracked in the system. So basically, for manual adjustments, this is the main let's say, practical example. Manual acquisition would not be something that needs to be done, but it's a process that is used for different scenarios where the asset master record, it's not in the system, but physically it's already there. For new acquisitions, of course, it should be going through purchase or any other process, but normally you will have a purchase order. Okay, so let's go ahead. Now, what are the IPSAS capitalization criteria for fixed assets? I mean, this is very important. I hope most of you already know about it. Otherwise, just pay attention. This slide is very important. First, IPSAS capitalization criteria, it means that tells us that the asset has to be controlled by the UN. So this is what is called the control principle. It does not necessarily mean that if the fixed asset has not been purchased, it is not a fixed asset of UN, then we don't need to record it. I mean, in other words, if we purchase an asset and we get control of the asset, okay, it's a fixed asset that has to be in our books. If we construct the asset, it has to be in our book. But even if we are not acquiring it, but we have it as a result of a donation, or even if we have a finance lease, as long as the asset meets all the capitalization criteria, it should be in the system. It should be in the SAP as an asset master record. So the criteria is a control criteria. So if UN is controlling the asset, then it's meeting the criteria. It's not a criteria of ownership, right? So as long as the asset is controlled by UN, then we are meeting these capitalization criteria, and we have to check the following ones. So will the asset bring future economic benefit or has service potential that is expected to flow to the UN? Yes. And then the last two that are very easy to understand. The useful life of the asset is longer than a year. All right. And if you say yes, you also have the asset meets the established cost threshold. So it's the capitalization threshold. So if you identify an asset in your mission that is controlled by UN, it has service potential or economic, or will bring economic benefit. Its useful life is longer than 1 year, and the asset meets established cost threshold, so the capitalization threshold, then it's supposed to have an asset master record in the system. Right? Any question about this slide? It is important. We can have a quick discussion if there is any point that is not clear. Otherwise, if it's clear for you, please click on your green check, so I have an idea of the explanation and how clear it is. Okay, please, if you joined recently and you don't know how to click on the green check, remember that you have to go to the top of your screen, or the screen that I'm sharing. So you will have a drop-down, let's say, toolbar, and then there you can click on Participants Panel, so you get the functionality that you need to use. Okay. So we have a couple of questions. All criteria should be met or only one of them? Of course, you have to meet all criteria. So for instance, if you have an asset that is controlled by UN, will bring service, its useful life is longer than 1 year, but then it does not meet the capitalization threshold, meaning it's a type of material that normally doesn't meet the capitalization threshold, and we will discuss that one later, you are not supposed to. Or if you have an asset that is controlled by UN because you have a lease contract and it's meeting the capitalization threshold, but then the contract is very short, and then so you don't have control for more than 1 year, all right, you may not. So, but anyway, this is a very business-oriented let's say, slide, and you can check the corporate guidance and discuss also with PMU or property management colleagues if you have any doubt. In general, this process is initiated by FA15, I mean, by a role that is assigned to PMU PCIU. So they are the ones that have to consider that. Do we have a capitalization? There is a second question. Do we have capitalization threshold for UN? Yeah, this is in the next slide, so I can go to the next slide now, if it's okay with you. Okay. So the UN capitalization threshold depends on the type of asset, as you can see. So for example, for equipment, plant and equipment, we have capitalization threshold, it's 20,000 in general. With some exceptions that are vehicles, prefabricated buildings, satellite communication systems, and generators and network whose capitalization threshold is 5,000. Right? Now for buildings, lease out improvements, infrastructure assets, major upgrades, then we have $100,000 as a capitalization threshold. All right? Is this clear? So I don't see many green checks. So I don't know if you don't find the green check or if it's not clear. Let me go back and ask you again. Okay, now I have. Okay. All right, so let me just recap. We have 4 capitalization criteria. The asset has to be controlled by UN, bring service or provide service to the organization. Its useful life should be longer than 1 year, and then it has to meet the established cost threshold. What is the cost threshold? It depends. If you are acquiring a vehicle, if UN is acquiring a vehicle, it should be more than 5,000. All right. Now, here, regarding the capitalization threshold, there is something that I need to explain because it's not so obvious. And we will touch it also in the future slides, in the next slides when we talk about acquisition, but I don't want you to get the wrong idea from the very beginning. So now please pay attention. The decision for the system to create or not create an asset master record is not based on the price of the item in the system. Meaning that these 2 slides that you are looking at now, they are slides that are talking about the business and about when the system should have a fixed asset. So this slide, together with the previous one, should help you and property management to determine if you should have a fixed asset in the system or not. So if you have a scenario where the asset meets all the capitalization criteria, including the threshold, there should be an asset master record in the system, but it does not mean that there is an asset master record in the system. Why? Because the creation or not of the asset master record in the system is based on the correct selection of the product ID when they are creating a shopping cart, for example. So if you check, if as a consequence of financial physical verification, there is a discussion and you consider that there is an element that should have an asset master record in the system and it's not there, then you have to take action. All right. So this capitalization threshold and the UN IPSAS capitalization criteria will help you to determine from the business perspective if there should be an asset master record. Is this clear? Meaning that I didn't tell you yet how the system operates. I didn't tell you yet when the system is creating asset master record. What I'm mentioning now is when we should have an asset master record. So you understand if from the business point of view, it's required or not to have the asset master record. Could you please click on the green check if you understand my point? This is pure business and policy, what I'm saying. Okay, so if, all right. So please be honest. If there is something you want me to repeat, just click on the red cross or ask me a question. Okay. So in other words, what I'm saying is that if you have an asset master record whose cost was over the capitalization threshold, it has useful life more than 1 year, it's controlled by the UN. If procurement requisitioners and inventory manager took the right steps in the system, we will have the asset master record. Okay. So, okay. So Byron and some other colleagues. Okay. So these capitalization, different capitalization criteria will be useful for you to know if you must have the asset master record. Now, this is also to confirm the capitalization threshold. But even though you may consider that there should be an asset master record, it's when the people are raising the shopping cart, they are not raising the shopping cart in the proper way, you may not have the asset master record in the system. So some fixing is required. Is it clear now? Okay. All right. So let me continue. Otherwise, when we get to the section of the acquisition, I think will be more clear. So now, okay, thank you. So now we're going to see who is involved in this fixed asset accounting process. We have 3 users, as you can see. We have FA15 user, what we call asset accounting user, and this is sitting normally in PMU PCIU. Okay. PMU, PCIU, and we will see what are the responsibilities of PMU, PCIU. And then there is FA16 user, which is asset accounting senior user, that is finance. All right, and then FA14, which is FA closing user, which is it's finance, but it's normally in UNS2. I don't know if they transfer already part of the responsibilities. So you as as a finance LP, you may be in contact, or someone from your office may have the role FA16, right? Because we trained, I think, around 50 FA16 users for the missions. So probably in your mission close to you, there is one person with the role FA16, asset accounting senior user. So what are their functions? The FA15 user, so PMU PCIU, creates, updates, and maintains the fixed asset master record. So when there is an asset master record that needs to be created manually, they are the ones that are doing it. They park adjustments to the value of the fixed asset, they initiate impairments, and they run monitoring results, whatever. What does finance do in this process? Approve valuation changes to the assets, transfers the assets, and creates and perform accounting activities for assets under construction. Okay, and review some documents that are created by FA15 users. All right, and then FA14 is the one that is running the depreciation in the system. Now, okay, there is one more question someone is asking. It's about the capitalization threshold again. So let me just clarify, because it's from a previous slide before we get into who is doing what. So the question is, for the capitalization threshold, do we consider cost of depreciated value of the asset? Of course not. When you need to assess if an asset value needs to be capitalized, you have the acquisition value of the asset, and this is what you consider. Before you have the asset master record, you don't have the depreciation. But I guess your question has to be related maybe to the fixed asset transfer. So if you have a transfer of the asset and the asset was already an asset in the first mission, if you send it to a different mission, you're transferring the asset at its net book value. But then it has to be capitalized, even if it's now with the depreciation value, because what is important here for the capitalization threshold is the acquisition value of the asset. So in order to determine if something is supposed to have an asset master record in the system, you need to consider what was its acquisition value. So it's not the depreciated value. I hope this clarifies. So let's continue with roles and responsibilities of the different, let's say, user roles that we have. We have FA15. This is PMU PCIU, so it's property management. And this one, FA16, is finance, okay? So who does what? Asset accounting reports, both come to them. Service notification reports, both come to them. Now, manual creation of assets is done by FA15. This is the creation of the asset master record that does not have, in principle, impact in the books yet. Then we have manual acquisitions for current year. The document is created by FA15 and it's posted by FA16, so it goes to FA16 through the workflow. And then manual acquisitions of prior year, that is done with Abnan. Now it's under FA16. At the beginning, when we delivered the training, it was under FA15, but this was moved like already, I think, some months ago. It's transferred to finance. Okay, so manual acquisition for prior years is under finance. The modification of asset master record is FA15. The write-off process is FA15. And impairment is FA15. Now, this has an impact in finance, so finance should be also understanding finance accounting senior users should be understanding the posting of the write-off, and this is why we train them. Asset transfer is performed and mainly done by finance. All right, the FA15 has nothing to do with the fixed asset transfer. All right, any question about this slide? All right, I have a few of them. So what role as FI, Umoja, LP should we get in order to perform well our assignment? Do we have any list of these roles? Okay, I'm not sure if this question is related to the content, so if you want to clarify, Justin, just write please on the Q&A. Okay, Luisa has a question as well. Considering a scenario, the UN purchased 20 specialized vehicles that meet all the criteria for capitalization, but due to government regulations, the UN is unable to use those vehicles. Can we treat these vehicles as an asset? Now, this is a very business question, right? The point that you need to reply is if UN has control of the assets. If UN has control of the assets, the vehicles are specialized, they are meeting capitalization criteria, even though maybe you cannot move the vehicle out of the base, I mean, it's still a fixed asset. But of course, this question, if you want to clarify, you have to discuss with your PMU colleagues. Okay, but as far as I understand, you just go to the capitalization criteria and check. Right now, different thing is if the UN does not have control of the vehicles and the vehicles are sitting somewhere under control of the government, right? But if you do have it, you have the assets. I mean, I don't see any reason not to record the asset in the system. Another question, for the assets who have all the UN IPSAS capitalization criteria but not satisfy the threshold because maybe a wrong appreciation from the procurement, are we following the team outside of the system, or we consider them as expense? Now, if the asset meets all the UN IPSAS capitalization criteria, the asset master record has to be recorded in the system and should not be considered as expense, not at all. Then you should see why the asset is not in the system. If there was an error in the shopping cart or in the procurement process, the error needs to be fixed, and the asset, maybe the shopping cart has to be raised again. Or if it's too late because it's a shopping cart from a closed budget period, then you have to go through a manual acquisition of the asset. But in any case, if you identify that the asset master record of the asset or the fixed asset is meeting the capitalization criteria, you eventually must have it in the books as an asset master record, right? And then you'll have to identify what is the best way to fix this situation. Another question, it can be recorded as an asset, but will only be depreciated when placed in, okay? All right. Okay, so Lucia, if your question is a very valid one, because the concern is that the asset will not bring a benefit to the UN, but it has potential benefits. So yeah, but this is very quite a business discussion that I will recommend you to go and we discuss with property management and also with the corporate guidance. All right. The idea for this session is not to have, let's say, even though I like to try to clarify some of the points, is not to have really the business discussion, but explain to you how is the fixed asset module working in SAP and how it integrates with what you know from foundation in finance. All right. So please allow me to leave open some of the business questions. All right. All right. Thank you for your kind words. So let's continue. We were talking about FA15 and FA16. So here you have the picture and any business discussion. And also I have to say FA15 users should be in close collaboration with FA16 because some of the decisions that FA16 is taking is impacting the books. So there is no way that these two roles can work in silos. There has to be communication and cooperation in that sense. All right. Now, some introduction about asset accounting. I already mentioned about the capitalization criteria, but then you need to understand also that the fixed assets in the system are asset master records that are in FA module, which is mainly for accounting. Now, these assets may be equipment as well. If you have a big machine or you have, let's say, a big server or air conditioning equipment, you may have a fixed asset that is also equipment. So if this fixed asset is equipment, there will be also, apart from the asset master record, there will be an equipment master record that is managed by property management. And it will be the role SD11, I think. All right. So the asset master record is the one that has the, let's say, net book value and the financial view of the asset. But for operational reasons, if it's an equipment, there will be also an equipment master record. Or if it's a real estate, or if we are talking about a building, you will have a real estate element. All right. So it's not only this asset master record has integration with other modules. Now this asset accounting module or the asset master record is used to maintain the asset master record and then support the whole process from the acquisition, depreciation, useful life, impairment, and transfer. Nothing new. I already mentioned this in the first slide. All right. Okay. So some important points related to fixed assets are the fixed assets are master records, are items that can be used for more than one reporting period. This is related to one of the capitalization criteria that we mentioned before. Useful life is more than 1 year, so they appear in more than one reporting period. Fixed assets include tangible and intangible assets. This is also something that you have to keep in mind. It's not only about building of equipment. If you have, if there is a software that is developed by the organization, or if the organization acquires a software license that will allow us to use expensive software for more than 1 year, so a license that will last several years, you may have also an asset master record. What else? Okay. Now there is the concept of net book value, but I really think that US finance experts is not new for you. So once you have the asset master record and after acquisition of the asset, you have the acquisition value. So month by month, the system will be depreciating the value of the asset. So you will have the net book value that is tracked in the asset master record, which is basically the acquisition value minus the depreciated value, right? Okay. So this is just a quick overview of what is the information placed in the system. So you have the asset master record that has the regular information about description, location, asset class, etc. And then you have the depreciation information, which is part of the. This is really the depreciation data is the one that is affecting the accounts. All right. This one is a very important slide. So please pay attention. I have more people. I have too much people that are not looking at my screen. So please be with me. I don't want to mention your names. So this is the integration of the asset master record with the general ledger. So it's very important for you. So everybody, please pay attention. So you have the asset master record is the one that was created by FA15 as a set, and then or automatically by the purchase order. But this has an impact on the book. How does the system determines where to post, in what GLs it has to post? So every asset master record at the moment of creation or as a derivation from the product ID will have what is called asset class. This asset class may be vehicles or light vehicles, specialized vehicle, maybe building, maybe it could be like infrastructure, right, or machinery. This asset class will tell the system to what GL it has to post. And then there is not only one GL. Remember one thing that we mentioned yesterday. In Foundation, when we were using a shopping cart, in Foundation, there was a product ID. From the product ID, we had the product category. And then out of the product category, we used to have the GL, right? And it was only one GL for expenses. In this case, it's the same kind of thing. So you have an asset master record with a product ID. Then instead of the product category, you have the asset class. And then the system determines the GL. But be careful, because this time it's not only one GL, but it will be 5 of them. All right. So one asset master record through the concept of the asset class, which is basically the type of asset, the system will derive 5 different GLs. So you have one GL and there is a numbering convention or a code that will help you to identify them. So GLs starting with 271 are for the cost of the assets. Right? So if we are acquiring, for example, in this example, we are acquiring an asset that is a light vehicle, a vehicle light wheeled. So based on that, the system determines a GL is starting with 271 that will have the acquisition cost of the vehicle. A GL that is 278 that will track the accumulated depreciation. So debit will go here to the 271 when we are acquiring the asset. Credit will go to 278 for the depreciation. We'll have 274 for accumulated impairment, and then we have the expense account related to depreciation, 778, and the expense account related to impairment. So just as a normal example, if we acquire an asset that is 5,000, if we acquire a vehicle that is, I don't know, maybe 10,000, let's say, to make it more rounded, 10,000, initially when we acquire, we will have 10,000 as a debit in this GL. Okay? And then month by month, well, we are depreciating the fixed asset. Let's say that is depreciating $100 per month, for example. Or yeah, I don't know if it's not, or yeah, it's not the right amount, but let's say it is depreciating $1,000 per year. So after the first year, we will have a credit of 1,000 in the accumulated depreciation. And while we are depreciating the asset value, we are recognizing the expense of the depreciation. So we will have a debit of 1,000 in the depreciation expense account. So the system is not like before GDP, right? Before GDP, we only had one expense account. And upon reception, we were debiting the expense account for all type of materials, and then we had to do manual adjustments. Now when we acquire, the system will debit the 271, okay, and will credit GRIR as usual. And then when we have depreciation, we are debiting expense account and crediting 278. So when we need to know the net book value of the asset, we can just take 271 and 278 if there is no impairment, and we'll have the net book value of the asset. Now, can you please click on the green check if I explained myself well and you understood the concept? Please click on the green check if it's clear, otherwise if you want me to repeat. All right. All right. So, okay, I need to repeat it briefly. So if you understood it, it's good because we make sure that we are on the same page. I'm sorry I didn't create any T for this, but maybe I can have. Okay, let me open 1 second. Let me open 1 second the posting schema so you'll see the debits and the credits, and I think will help you. As I said yesterday, in the job A section, we have a list of posting schemas that were created by Chris Vickery that are very useful for you. So I'm coming to the same section as we opened yesterday, and this time we are going to open the posting schema for fixed assets. So you see, for asset accounting, we have all these posting schemas, one per each of the processes that we mentioned in the end-to-end. So now we are discussing about what? We are discussing about manual acquisition. All right. So I hope the part of the number of GLs is clear. Now instead of having only one GL, we have 5 of them. One to track the asset acquisition value, one to track the accumulated depreciation, right? And then the corresponding expense account. So what is an example of posting that is performed by this system? Let me see if I open the spreadsheet. It's not opening. 1 second. Open. Sorry, 1 second. I don't see the file. Just give me 1 second, please. Oh, maybe it was already opened. No, 1 second. Okay. Yeah, now I have it. Yeah, it's a bad moment now for Excel. Yeah, it doesn't work, the spreadsheet. Okay, so I'll come back later to that because now the spreadsheet doesn't work. Huh? That's type of thing that happen only when I'm doing a live WebEx. Okay, so I'll come back to the spreadsheet maybe later. So the point is, okay, for now, keep into account that we have 5 different GLs, and then we'll review later the spreadsheet because my Excel is not working now. Whatever. Okay, so sorry for the ones that said that you want me to repeat. Now I will repeat, but maybe later. So now, please, it's enough if you understand that for a given asset class, you don't have 1 GL, but you have 5 of them, right? 2 are expense accounts to recognize the expense as the asset is depreciating. and as the asset, if the asset is impaired. And the other three GLs, they are basically oriented to keep the net book value. So for one particular asset, the system will derive its asset class, so meaning that if it's a vehicle, if it's a light vehicle, or if it's a specialized vehicle, or if it's another type of, if it's a generator, etc. And then the system will get 5 GLs. 3 of them are oriented to keep the net book value. 2 of them are oriented to track the expense while we are using the fixed asset. We'll see the debits and the credits later. Maybe I'll do a break and we'll touch that. So one more point. Regarding the asset accounting, this is a module that is pretty much integrated with other modules. So you can see it here in between. So how is asset accounting integrated with general ledger with the 5 GLs that I was telling you? How is asset accounting integrated with cost management accounting, which is the CO module? So while the system is depreciating the asset and recording expenses, it's also tracking the cost of this action. How is the asset accounting module related to real estate? So some of the assets that we have are buildings or infrastructure. So if they are buildings or infrastructure, they will be also present on the real estate modules of functional locations, or they will have functional locations. There is integration with real estate. How is this integrated with supply chain and procurement? So basically, since the very beginning, when they are raising shopping carts, they have to specify what is called SAS material, which is an asset master record. Which is a type of material that identifies assets. And how is the asset accounting related to the module plant maintenance? Because this is where the equipment master records are managed. Okay, so property management, they work on this side. Engineering is managing, I guess, normally real estate. Then you have procurement, and then you have financial accounting and accounts unit, right? And then CO, which is something that we are not really, let's say, using that much for now. Again, this was the end-to-end process. All right. And now the last part of the presentation, this one already we reviewed. The last part of the presentation is a bit more details on acquisition. So let me see if you have any other question, and we'll do a break for 5 minutes so I can fix the problem of my spreadsheet to show to you the posting. 1 second. So there is a question from Bashir in case of asset transfer. Okay, so if it's a question about the transfer, just hold it, because the last part of the presentation, we are going to review the acquisition process and the transfer process, which is the other one that is more important. Okay, it will come later. So, okay. So let's break now for 5 minutes. So you take some fresh air. 5 minutes, I think, will be enough. And I'll call you back around 11:05. So yeah, you have actually seven minutes. Okay, please be back in 5 minutes. Thank you. All right, welcome back. We are going to continue with the session. So please, thank you for those who have been supporting me by email. Thank you, Carson. Okay, while people are coming back, I got a few questions in the break, and we are going to. So let me just reply to them while the rest of the people are connecting. So okay, Xiaohai, you were asking that on using internal order for low complexity assets under construction. I'm going to cover that in the following slide as well. But I recall that you said that you recall in the works on AUC it was said that all AUC should be tracked by WBS-E. Can you clarify? Yeah, that's true. We got instructions from Office of the Controller and from BFD, so from Elizabeth. I think you know Elizabeth. And also we confirmed that with Accounts Division. For any new project, AUC project, it needs to be supported by the project system, which is using WBS, work breakdown structures. So the usage of internal orders has to be avoided for new projects. If you already have one that already started with internal order, you just go ahead and you complete it. But if it's a new project you are going to start from scratch, you must use WBS. This is a requirement also from the budget side. And yeah, there is no discussion anymore about it. And it's a decision that has been made. Okay, Asrade, you have a point about something that you didn't receive by email. So please, if you are missing something, write an email to Neil Jail, the person that Neil Jaile, the person that sent the meeting invitation, and also copy me, so they will fix it. All right. Thank you, Carson, for your support. Okay, so let's continue. Please be back. I see that a lot of people is still with the coffee in the hand. So please come back. I need more people looking at the screen, so I'm going to continue. I just prepared during this small break slide to explain the posting schema for the acquisition, the basic one. So I hope this may help you. So let's take an example. All right. Let's think that we are acquiring through a shopping cart. We are procurement or acquisition rights a shopping cart for the acquisition of one asset. All right. The price of the asset is $10,000. But now remember as well that, as we explained on Monday, when we are acquiring equipment, or in this case even fixed assets, there is a concept of the associated costs, which we are not recording actuals, but we are recording a standard associated cost. For inventory items in peacekeeping, this percentage was 8%, if you remember. For fixed assets, it's 20%. So what would be the posting schema? All right, if you can write on the chat what you think, what would be the posting schema when we are acquiring this asset. So when we process the shopping cart, there is no impact. When we process the purchase order, there is no impact. So what would happen when when inventory manager posts the good receipt? What do you think will happen? Can you please tell me what would be the posting in the account 271? The account 271 is the one I told you on the previous slides that will contain the acquisition value of the asset. So accounts starting with 271 will have the acquisition value of the asset. Then 278 is for depreciation, accumulated depreciation, and 778 is for expense. So especially for those who ask me to repeat, or that click on the red cross to say it was not clear, please send me by message what do you think would be the posting? All right, but also write the amount. Don't tell me just debit expense, etc. So Byron, I hope you are also there. So what will be the posting? So when the good receipt is posted in the 271, so be careful with this one. What is the value of the asset that we are going to capitalize? We are not capitalizing only 1,000. We are capitalizing 1,000 plus 20%. All right. So we are debiting the 27 account with $12,000. All right, Salvatore. All right. Now hold on. Hold on. Someone is saying, how much shall we credit GRIR? If we credit the price of the asset is $10,000. So if we credit GRIR with 12,000, then we are going to pay 12,000. Right now, the 20% is standard associated cost, but the vendor is only getting 10,000. This is standard associated cost. Is the same concept we review for inventory. So the posting to GRIR will be 10,000. All right. And then we have the credit to expense account of 2,000, and this is the same concept that we review on Monday. If I'm confusing you, now if you are getting confused, please click on the red cross so I can show you the presentation we saw on Monday. Okay? Because this was on Monday was clear, so it's the same concept. So if I can drag, let me open the other presentation that I have it here. It was inventory integration. I think it's this one. Yeah. So if you remember our example from Monday. Okay. Our example on Monday, we were acquiring 10 items that were $100 each. So when we were posting at GRIR the $1,000 because we are going to pay the items. But in inventory, we were evaluating this inventory, adding the 8% of the standard associated cost. And then this was going as the 8% was going as a credit to the expense account for the freight services to net them off in case they are paying with a different PO, etc. So the idea is basically the same. You see here, you are actually paying 1,000, and then you have here 1,000 plus 8%, and then you have the credit is still for the price, and then you have a credit on expense account. The sense of this credit, as we discussed on Monday, is because this 8% is an average. So eventually you will have more postings here on expense account for the freight services. So you want them to net off in average. So you have in inventory, like you are recognizing the value of the inventory, including the standard associated cost. In our example here, so in our example now for fixed assets, it's basically the same idea. So the value of the asset is 10,000 initially, right? Maybe I shouldn't say the value of the asset. Maybe I should call it the price, right? So you don't get confused with the text. So the price of the asset was 10,000. Then after adding 20%, we have 12,000 that is capitalized. So we are not capitalizing only the acquisition, the price of the asset. We are considering as acquisition value the price plus 20%, right? Is that clear? Can you please click on the green check if this, but let's go posting, I mean entry by entry. Is it clear that the debit to the account 271 has to be 12,000? Is that clear? Click on the green check if this part is clear, why we are debiting as 12,000. All right. Now, is it clear why we credit only by 10,000 to GRIR? Because this is what we are receiving and this is what we are going to pay. If it's the 10,000 on GRIR is clear, please click on the green check as well. Again, because I removed your result. All right. Okay. All right. And now the point that drives you crazy is this credit that goes to expense account. So what is this expense account? Is the same as we were touching yesterday. Is this one for standard freight cost? Let me open it. Let me open the posting schema. 1 second, so you remember what is the GL. It's the same concept we saw on Monday. So if on Monday it was clear, it's supposed to be also clear now. 1 second. So at least we only have to clarify again this the credit on the expense account. I know you always debit expense account, so I know this is a bit creates a bit of confusion. I was also very confused when I was looking at this by first time. So this is the posting on movement types, right? And we were talking about this is the posting of a good receipt. In this case, we see that is a posting of a good receipt for SAS materials. As I said, always use these posting schemas. They are great. You will get a very good understanding of the system integration if you get familiar with this document. So when they are posting good receipt for one of our assets, you have the posting on the, depending on the asset classes, in the 271 account. Here it says 27, but it's 271. All right, that will contain the value of the asset plus the corresponding percentage. Now this amount for peacekeeping is not correct. It will be like 120. Okay. Then you have the credit to GRIR for 100. Okay, and then you have the credit of the 20 that go to the GL that is called freight services standard cost. Why we are crediting then in the freight services, and this is the GL that is credited. Why we do that? Because as I said the other day, you normally have to pay in a separate PO or in a separate line the freight services to a company, right? So you will have also another service entry sheet for the freight services if you want, if we are only talking about freight services, right? But you know that associated costs can have also installation fees, etc. But if we are only talking about freight, you may have another PO and another service entry sheet that has to be paid, right? Ideally, it should be $2,000. So you will have an expense account that after this service entry sheet is posted, you would have another debit in the expense. All right. So does this make more sense now if I consider the service entry sheet for this asset? So you see that there was a debit on expense and then the credit on expense to bring, let's say, to capitalize the associated cost. Jackson, does it make more sense? Okay, so I will reply to the other questions that are over there. Okay, and once you confirm that this is fine. Very good, very good. Okay, Bashir, that you're right. Exactly, Safa. So it's expense. I mean, it's an expense account, right? You see that it's an expense account. I mean, I'll have to keep two T's there for you to. So ideally, if you want me to be very accurate here, sorry, if you want me to be very accurate here, I will have to put another T, okay, and then I'll have to say here freight. This is the deal. Actually, I can put the number in. Actually, the number. Give me 1 second because I'm just doing this for you on the fly. So if you want me to be completely accurate, so you say it's my fault that you don't understand because I don't explain it well, then it will be, this one will be the GL for the freight, okay? Okay, and then we'll have the regular expense account here that will be, I mean, depending on the type of service. So this will be the normal expense account, the corresponding expense account. Okay, if you want. So let me just make it a bit bigger. Just I'm trying to, if you understand this, the rest of the process is nothing. Huh? I think this is the real integration with the FI. So please allow me to spend a bit more time so all your colleagues get the idea. Something like this, right? So the credit goes to this account, and this will be the debit on the expense account that is for the freight service. So this 20% is an standard rate that is defined under the assumption that in average, all the debits for freight services for fixed assets are going to be balanced with the credits that you have in this year. Now it's very clear. They are telling me, okay, thank you. So, all right. So I give you another chance. So please click on the green check if it makes more sense. So we are, if it makes sense now for you. So we are acquiring an asset that is $10,000, but we have to capitalize the 10,000 plus the standard associated cost, which is 20%, right? So we put here the 20,000 plus 20% in the asset account, asset cost account. Still, the credit is going to be 10,000, so because we only paid 10,000, and then the other credit goes to this standard associated GL. And why is 20%? Because we are assuming that the service entry sheet for the freight services will generate an expense that will be in average about the 20% of the cost of the asset. Now, this may be accurate or not, and then we'll see down the road, because probably in the future we'll need to eventually capitalize the actual also of the freight services. All right, please click on the green check if it's fine. Exactly. Someone is telling me that when we record the 20,000, I mean the 2,000 on the expense account for the first services, we should have also the credit on the GRIR. Yeah, that's of course is correct. I was just avoiding some details. Okay. Okay. So there are some more comments. Of course, these freight services cannot not necessarily have 2,000. No, these freight services can be also $3,000. So again, the same thing is here. The same here. You have the freight services that may be whatever amount. All right. So it's paid separately. Let me just maybe change the color so you see you link it to the right posting. Okay. So the goods received when it's related to the fixed asset will debit the asset account with the price of the asset plus 20%. Still, you are paying 10%, and then it sends a credit to this freight services GL with the hope that the percentage is properly estimated. So at the end, you are basically capitalizing the freight services expenses as a standard rate. All right. All right. Now we have everybody clicking on the green check. Thank you so much. And then we'll continue with the presentation. Sorry if it was clear for you in the first explanation, but I think this is important for everybody to get, and not everybody get. I mean, I don't explain things as well as to get everybody catching them at the first shot. Okay. Let me see if there is any other question. During acquisition, we are recording 20% standard cost. This is fine. Okay. Okay, there was a question about how do we pay the freight services. That will depend on how the service is incurred. Normally, it would be a different PO or a different line, right, for the fixed asset. All right. What would be the entry of assets costs that include freight costs? Yeah, that is yeah, that's a different discussion that we need to take offline. The entry on 74201. So the entry on DGL, of course, it is statistical on the FM side. So this is not impacting the budget at all. You are paying 10,000. So this entry here is purely statistical. So this is purely statistical. Okay. Now let's see the rest of the details. the rest of the details about acquisition. All right, so let's continue. Now, there is someone whose name is here. If you want to send me an email, so we can take offline the question when the asset cost includes the freight cost. All right. So okay, let's continue. So acquisition of assets, we can acquire assets on 4 different ways through purchase, and this is it's very important that we understand the concept of what is a SAS material. All right. Okay, SAS material. Then we have donation, when assets can be donated in kind with or without grant. Okay, we'll talk about the grant in a few minutes. And assets can be donated the right to use. Okay, important considering that we have control if we have the right to use. Self-construction as assets under construction, that we are going to touch them briefly later, and finance lease. So this is the end-to-end process for acquisition of assets. I want to cover it because I think it's related to the capitalization, and that's a key point for you as a financial piece. So there will be a shopping cart. The system creates automatically the asset master record. There is the PO, right? And then the system is updating the asset master record with account assignment. And this is goods received. This is where this is the important point. The posting date of the goods received is actually the capitalization date of the asset. So, and then of course there is invoice receipt, vendor clearing of the payment, and equipment installation. But whatever is impacting the accounts on the acquisition is happening at the goods receipt moment. So this is the second. It's another slide that is very important for you. So please open your eyes and understand the following concept. Otherwise, you'll have meaningless discussions with property management. When the shopping cart is created, the asset master record is created. Okay. Only if the material type is SAS. So you remember how important it was to raise shopping carts using the proper product ID, right? You remember that. In this case, it's not only the product ID that has to be correct. It's also that they have to check that they are selecting the product ID for something that is called SAS material. In other words, a SAS material is a material ID that starts with 2-1. So if they are using a product ID that is starting with 2-1, there will be an asset master record. If they are selecting one that is starting with 1-5, they will not have it. So the selection of the material ID is critical. Okay. Why? Because even though the price, you may have an element that is above the capitalization criteria and above the capitalization threshold, and you are paying more than 5,000 or more than 20,000. But if they select in a material that is not SAS, is not a fixed asset material, the system will not create the asset master record. So you may have statements, financial statement, when you have expend completely a fixed asset because it was not recorded as a fixed asset. Okay. Do you have any question about this SAS material? So I have another example, I think, for this. Okay. So what is let's think about one example so we understand the importance of selecting a SAS material or non-SAS material. This is done basically by requisitioners. But what is the point? Let's imagine that they have to acquire a router. Okay? So a router that is a network service equipment. Now I have a question for you. Do you think this router will be a fixed asset or not? Can you click on the green check if you think it's a fixed asset, or click on the red cross if you think it's not a fixed asset? If you think it's a fixed asset, click on yes. If you think it's not, click on no. Now, okay. So the correct answer to this question is not clicking on the green check or not clicking on the red cross. Because if I tell you they are acquiring a router, you actually don't know if this is a fixed asset or not. Some people are saying it depends on the price. It's fine. So now I'm telling you that okay, I will ask you another question. Sorry for asking the tricky ones. So now I'm telling you that probably is going to be beyond the capitalization threshold. Now, will you have an asset master record in the system? Click on yes if you think yes, or click on no. Click on green check or click on red cross. If it's above the capitalization threshold and it meets the capitalization criteria, will you have an asset master record in the system? Yes or no? Yeah. So the answer is yes, but if you'll have it, if the person that is submitting the shopping cart is selecting the proper product ID. So you may have a shopping cart with this router that you're going to pay $10,000, and you may not have the asset master record in the system if they selected the wrong product ID. And it's not so difficult to select the wrong product ID because people are not aware of implications of selecting the wrong product ID. Let me give you an example, and let me continue with the example. So this router, when we say we need to acquire a router, it could be this one, even though it looks a bit like Android, right? It looks like a kind of a small robot. This is a router, okay? And this is a commercial router to have Wi-Fi services. But the router could also be this thing, one of these big things. So the router as network service equipment may have a price about $300 or may have a price about $10,000. It could be a fixed asset or not, depending not only on the price, because you need to have a proper description of the item. So let's say that this one is a router network integrated services 1GA basic. If you have if they provide the description of this router as a network integrated services, and they describe the other one network integrated services, look what it happens. I'm going to open now the material master catalog for you to see the different options that you get when you open a router, so you understand likelihood of having an error there. So if you don't know how to get to the material master record, you have to go as well to ISIC. In ISIC you have Umoja on ISIC as usual. So this is where you have you will get the whole list of product IDs, right? And then there is something called material master reference. We have been training requisitioners and other type of users on this. Now there is something called search tool for material master, and this is the one that contains the assets. The product IDs. One second. It takes a bit of time to download it. I actually downloaded it already, but let me just see if I have it. Yes, I have the file here. Okay, one second. I'm opening that spreadsheet. Yeah, I have it already. Okay. So this is the material master catalog. So if we say we want to acquire a router, we can search here and we write router, right? So why I'm doing this, even though you are not supposed to select material, because you need to understand the difference between a SAS material and non-SAS material, and then understand that when you are involved in troubleshooting for a given material, you may have more than one product ID. So if I search by the word router here. we get a long list of routers. Okay. In our presentation, we describe the item as network integrated services, right? So if I search here by network integrated services, I get this list of materials IDs. Now, it's very important that they are very specific, because if the person that is raising the shopping cart selects a router as network integrated services 1GE basic, this material master starts with 1.5. And if they select 2GE basic, it starts still with 1.5, right? So look at this one, 2GE basic. But then we have 2G, the same router, network integrated services 2GA, but instead of basic, it says unified communication system. But look, this material number starts with 2.1. This material number starts with 1.5. So if they select this product ID, we will not have a asset master record, regardless of the price of the shopping cart. Do you understand my point? Can you please click on the green check if you understand the point? Even if the shopping cart, in the shopping cart, they select this material ID, and the shopping cart is for $10,000, there will not be any asset master record in the system. So upon good receipt, the item will go to inventory. After issuing out the item from inventory, it will be fully expensed, regardless the price, because the material that has been selected, it is not a SaaS material. So meeting or not the capitalization criteria is a reference for you to know if there should be an asset master record or not. But the system does not understand the UN IPSAS capitalization criteria. The system will only look at this number. If the number starts with 2.1, we'll create asset master record. If the number starts with 1.5, we will not have it. So you may have, so coming to the presentation again. If they are acquiring this router, but they select, if they acquire this router, one moment, I want to make a note here. Yeah. If they are acquiring this router, but they select the number, sorry, hold on. If they are acquiring the router that is $300, but they select the product ID starting with 21, you will have a fixed asset. You will have an asset master record in the system whose acquisition value will be $300 plus 20%. If, on the other hand, if they want to acquire this one, but they select the asset master, the material number starting with 1.5, you will have an equipment that will be fully expensed, even though the price was very high. So it's critical in this process, the proper selection of the product ID. And in other words, it's absolutely critical, the understanding of how the material master catalog, works, so people are able to select the proper product ID. Because as you see, the difference here in terms of description is just that this one is unified communication system and basic. This one is basic. This one, it's a bit more, it's more complex and more expensive. So the proper material and product IDs will be, this one should be SaaS, so it should be start with 21. This one should not be SaaS, it should start with 15. Sorry to give you this long explanation for such a simple concept, but their implications are strong. Now, is this okay? Is this clear? Can you click on the check or ask any question if you think is not clear? Click on the green check if it's fine. So someone is asking, if they select a non-SaaS material and we realize that it should have been 21, how can I correct? So if they selected the wrong type of material, so if they selected non-SaaS when it should be SaaS, the first thing we need to consider if the budget period is still open. So if the budget period is open, they should close. They should the item should not be received. So the goods received should not be posted with the wrong product ID. They should create again a shopping cart, because the way to fix it is much more difficult. Because don't think only about, if they do this mistake, don't think only about the consequences in the asset master report. The inventory is also messed up, because now you have corrupted the moving average price of the elements, because you are now all of a sudden you may be saying that the moving average price of these small routers is not 300 but is 5,000. So it's better if they cancel the shopping cart and they rush it again with the proper numbering. But otherwise, on the fixed asset side, you can manually create the asset master record and fix it. And then there are some job aids also to fix the inventory problem, right? But you want the shopping cart, if it's possible, to be created properly. Yeah, someone is saying that it's hard for a normal requisitioner to understand the application of selection of material number. Exactly. So when requisitioners have to select the material ID, the people that technically is defining the element has to provide a detailed description. Requisitioners sometimes don't have the background, but if this is an equipment that has to be submitted for the IT department, the requisitioner needs to understand that until he gets until he gets the full description, he cannot determine what is the right product ID. So if someone is asking, please raise a shopping cart for a router for network integrated services, before selecting this one or this one randomly, the conversation should be, okay, is this 1GE, 2GE, 3GE, 4GE? Is it basic, if it's voice, or is it unified communication system? So, because the importance of the selection of the right product ID has to be understood, right? All right, thank you. I think that went very well. So I will continue with the rest of the slides. I don't want to spend much more time on this. This is a bit of explanation of the process, but we spend a lot of time. So I think I have to go now to the transfer side. Okay, so for the fixed asset transfer, give me 1 second, and we start with the fixed asset transfer. Yeah, for the fixed asset transfer, we need to understand that the transfer is involve the change of ownership from a fixed asset in terms of account assignment. So now I think, Bashir, you had a question about fixed asset transfer. Okay. So as you can see on the screen, normally for fixed asset transfer between different missions or different plans, in general, there should be an STO, which is the stock transport order. Why? Because yeah, if we are moving one asset from one mission to another one, there should be also a logistics process, right, to send the element physically from one mission to another. So normally you should have an STO, but if you don't have an STO, you need to have let's say a notification. So the typical scenario with STO is this one. You have on mission 1 certain assets. In this case, we have vehicles, and we are sending the vehicles to mission 2, which is a different plant. So there should be an STO, and then you have different types of STOs that will end up in different type of postings. So you have STO, which is SDS. This is strategic deployment stock. So it's assets that were acquired by Brindisi, UNLV as part of their mandate. You may have transfers that are not budget relevant. So maybe if one mission has surplus, is sending the asset to another mission and is not charging the receiving mission. You have maybe some examples of budget relevant transfers, which is not common. And then you have setting that we are not going to discuss it now. Okay, this is normally typical for special political missions and peacekeeping. So another typical scenario that you have is without STO. So if something requires a change in the account, an asset requires a change in the account assignment, but there is no transfer, so we are not sending the asset from one place to another. So meaning that, for example, it happened in Minusta, no? When they were changing from Minusta to Minojust, the assets of the mission were transferred from one coding block to another one. So then there is also transfer, but in this case there will not be STO. So how does the transfer work? The transfer process, I'm not covering it here because this is pretty much an overview, but I'm going to open the posting schemas for you of one transfer and discuss one case. So if you have any question about it, we'll be able to address it, hopefully. So let me open the posting schema for the transfers. As I said before, if you want to see the posting schema, you have them here in the job aids. So you go to job aids and you go to posting schemas. This in the general. That I'm going to recommend you once and again to go here because it is very useful and very well explained. So this is the one. Now I'm going to open the post. So what we want to open is transfers. So we open the posting schemas for transfers. All right. One second while the spreadsheet is opening. There we go. So without getting into much details, right, because there are plenty of details here. If you are FA16, you remember. There are some transfer within volume and X volume. Basically, within volume means if you are sending from a fund that is starting with 20 to another fund that is starting with 20. X volume if you are crossing report, I mean, if you are crossing the books. So if you are sending from 10 UNA to 20 something or from 20 something to 10 something, right? So, but in any case, we are going to explain only the basic one, which is, for example, this in volume. I don't need to cover all the details because you have FA16 user in your office. So if you want to discuss further, you can refer to them. So the transfer of, for example, non-budget relevant, if you are receiving fixed assets from a different mission and it's non-budget relevant, so your mission is not paying for them, which is the typical scenario, because then if you pay for them, then everything goes to revenue anyway. So you have in the action of the transfer. So in this scenario, we are sending from 10 UNA. I'm crossing volume. I want to open the one that is not crossing volume, so within volume. So the same scenario. We are sending from, okay, this one is actually between grants. It is actually the same thing, I don't mind. So we are changing cost assignment because we are moving from one grant to another one, but you can imagine that is a sending mission to a receiving mission, so it could be even, I could even take this one and put it here. So one second. So I take the same example. Okay. So 20 BLB. Okay. Sorry. Just for you to understand the example. Yeah, that's fine. So if we are sending this fixed asset, all right, this fixed asset that is sent from 20 BLB to Mali, from Brindisi to Mali, all right? So what is the impact in the accounts? This asset had its own net book value. Where can you capture the net book value of the asset? So when it was acquired, the asset cost was $52,000. Now it's depreciated, so, and this is tracking the account 271 as I said before. Now its depreciation, has been depreciated for 5,777.78. And this is in the account 278. This is something that I mentioned already in this presentation. Right, so give me again the chance to show to you the table of the accounts. So so you see that I'm not lying. 271 is the account that contains the cost. 278 is the account that contains the accumulated depreciation. So these two GLs, this one and this one, the first two. Okay, this one, and this one. Okay, 271, 278. So how does the system calculate net book value? So it's taking the full amount. Okay. Yeah, actually this is very strange. 1 second. Because it's crediting to 271. So yeah, so it's this one is the other way around. It's actually Mali sending to Brindisi. If I'm not getting wrong. So the example I built, it doesn't make. I mean, it's not the common one when 20 BLB is sending. But anyway, in this scenario, we are sending from Mali to Brindisi in this case. So we are going to the 271 and 278, and we are getting the whole net book value. So we are crediting the asset cost account and debiting the accumulated depreciation, and we are transferring the net book value to the receiving mission. Okay, before it was an example between two different let's say grants. So that's why I created a very weird example. If we have another example here, for example, this one that you see on the second line is an example of posting where it's budget relevant, right? So the receiving mission is going to pay for it, and we are moving in this case from Brindisi to Mali. So the sending mission will have a credit in the asset cost and a debit on the accumulated depreciation. So what we are getting from these two lines is actually the net book value, and then we transfer the net book value to the other account assignment. That's it. I mean, it's not complex. There are some particularities here. If you are crossing volumes, you are not transferring the depreciation, but you are actually getting the net book value and only transferring as an asset cost because it appears in a new book. But in a nutshell, that's it. You have a credit and a debit on the asset cost and the accumulated depreciation, and then you transfer the full net book value and the depreciation. So you transfer again the asset cost and the accumulated depreciation. I know I'm not spending enough time on this, but we really don't have much time now to cover all the details. So can you please tell me in general if it's okay, as long as you understand the basic thing, which is that you have the net book value, you can calculate it from the asset cost and accumulated depreciation GLs, and then you transfer it to the receiving mission, it's fine. No need to understand, I mean, all the details now. Okay, please on the green check, or if you want me to clarify something, please ask a question. All right. Okay, thank you. So, and something that is important is that for integration with FM, if the transaction is non-budget relevant, you can go and check commitment item column, right? If you see a commitment item column that, as I mentioned last days, will tell you if the impact in FM is real or statistical. So if the transfer is non-budget relevant, the commitment items will have an S, so it's a statistical impact. So you are transferring the net book value, but the impact in FM is statistical. All right? Is it clear? Okay, thank you. And yeah, and then there is something else that FA16 needs to be aware, because if it's not budget relevant, there is an automatic posting to RG2 from, but this is something that we don't have time to cover now. Basically, there is a journal voucher that needs to be processed later to recognize because this is transferring the asset value, but you have to recognize the expense of the sending mission and the revenue on the receiving mission, right? Because you are sending the fixed asset that has a value and you are sending without any cost So you recognize the full expense on the sending mission and the revenue for the net book value, which is in this case 46,000. All right. I think as an overview, this should be enough. Of course, if you want to learn more about it, you have the job aids and the training material that for fixed assets is pretty good. I'm afraid I don't have time to cover much about assets under construction. I'm going to send you the presentation anyway. And in this case, the most important part is like the end-to-end process. And yeah, I'll send you the material so you can take a look. You can have here a quick view to the high-level process of assets under construction that has four phases: the setting up of cost collector, collection of costs, and settlement to the AUC. So collection of costs is basically what you are expending and you are hiring contractors or companies for the construction for the services, or when you are issuing materials from a stock for the construction. And then there is a process of capitalizing all this expense until finally the asset is created. I'll send you this presentation that has the overview of the process, and I think it's enough for you. What is very important to notice here is that Xiaohai was asking, in the case of assets under construction, for new assets under construction, you are not supposed to use internal orders. So if you have in your mission, you're going to start with the construction of a new asset, even if it's simple. If you consider it's going to be above the capitalization threshold, you need to use WBS element work breakdown structure, because it's a requirement also from the budget side from New York. Now I think it's over. We reached 12 o'clock, and we'll have a second session at 2 about grants management. So if you have any other question, I'll be happy to address it. Otherwise, I think we'll leave it here. I try to give you as much information as possible in these 2 hours, but you know sometimes it's not easy because finance content is very wide. But I trust and I hope that this was detailed enough for you to have an overview, and then if you have discussions of issues in the mission, you at least the basics are under control. If you are experiencing audio problems, as I mentioned, most of the audience can hear me properly. So we will send the recording of the session so you can hear it later. But yeah, unfortunately, the audio problem may be related to network, to your connection, or to your client, and we cannot fix it from our side. Any additional question that you were holding for the last minute about, even if it's about assets under construction or about transfers that we show them a bit in a hurry? Do you have any other question? Please write it. Otherwise, we will stop here. So there is a question. Okay, there is a question from James. So James, when you are transferring the asset to an entity that is in a different volume, you are actually transferring only the net book value. But I guess if you are transferring within the same volume, the asset was already there. So you want to keep track of the depreciation. Otherwise, it will look as you are acquiring a new asset. So yeah, that is a very finance question that we'll have to discuss. All right, thank you so much. I'm not sure what is the time on your sections, but we'll break here for lunch in Valencia. We will send the documents. We will send the presentations, and I want also to encourage the ones that you are doing Ramadan. So I admire the way you are attending the sessions on these very challenging days for you as well. So we'll send the presentations and the videos. If you can attend, it's fine. If you don't, just watch the video afterwards. Thank you so much. I'm sorry to keep you listening to me for 2 long hours, but I hope this was useful for you in some way. Thank you so much for your kind words as well, and talk to you in a couple of hours. Good news is that this afternoon session is going to be very light and will not take more than 45 minutes. Thank you so much. Have a good rest the following 2 hours. Talk to you later. Bye bye. Thank you. Thank you.